would you like to be? A trader or an investor? Because in today's session, we will be able to uncover this and we will be able to realize our profile if trading is indeed for us or being an investor is a preferred route for our profile. Okay, so Chris said she is both. Cian said both. Okay. Oh, both. Okay. So there's a beauty to each one, and we will surely discover that today. But this is just a 30-minute session, so I will just be focusing on the highlights. And I'm so sorry, my neighbor is playing with their drum, so it's a bit noisy. Okay, so let's start. I have 8 visitors. That's fine. Okay. So my first question is, so I have a story, just a short one. Okay. So imagine today you and your friend bought equal amount of seeds to plant in your fields. But you sold them to someone in a day because you could earn profit, and good job, you did. But your friend, on the other hand, planted the seed, nurtured it for how many years till it gave new seeds, giving him large amount of seeds to sell and gain profit on a regular basis. So, both you and your friend was able to gain profit, but you just choose different strategies. Now, this is simply the difference in investing and trading. So allow me to share with you today the 4 major differences between an investor and a trader. Okay, any questions so far? Okay, right. Now, the first question is the element of period, the element of time. How long are you willing to hold the stock? So for example, are we all Filipinos here? Yeah, I think so. Yeah, we are. Hi, Ching! Welcome to my first Facebook Live. So, how long are you willing to hold the stock? Let us say you buy Jollibee today at, let us say, 200, because the current price is, let me see how much Jollibee is today. Okay. It's 285. You buy 100 shares of Jollibee today. How long are you willing to hold that stock? Who wants to answer? Are you willing to hold Jollibee for years? Or if you gain, let's say, 10% from the initial amount you paid for, are you willing to sell Jollibee right away? Okay, so trader holds stocks till short-term high performance, meaning if they see that the trend is going up, they'll hold on to it. But if there are any signs that Jollibee will dip or will go down based on what they see in their charts, they sell it. Whereas investing is for investors, they hold a certain stock for years, sometimes even decades or longer than that. Short-term fluctuations, they don't really mind that. Okay. Now, the next question is capital growth. So I just defined capital growth here really quickly. So capital growth is an increase in the value of an asset or investment over time. In other words, if your investment has grown by X%, are you going to sell it right away? By how much? Okay. Lloyd over here mentioned he's willing to hold on to Jollibee for a month. All right. So later on, um, we will discuss a bit about your profile being in the middle. Because sometimes they will ask, can I be both? Yes, definitely. In fact, given that Jugen or Lloyd has answered a month, that means somehow he is in the middle. Maybe Lloyd already knows. I'm not sure. Correct me if I'm wrong, Lloyd. You already know how to analyze charts. That's why you're willing to sell it after a month. Because definitely with just a month, it depends. But sometimes the movement of the price is just very minimal. Okay. So next is by how much. So traders look at the price movement of stocks in the market. If the price goes higher, traders may sell the stock. Simply, trading is a skill of timing the market, whereas investing is an art of creating wealth by compounding interest. And of course, some stocks will give you dividends every year. So that alone is another earning potential when you invest in a stock market. When you buy some shares in Jollibee, uh, they sometimes would give dividends several times in a year. Okay, next. Oh, this is interesting. What is your risk tolerance? Okay, so people would say, don't engage in the stock market. That's too risky. That's gambling. Okay, so my perspective towards risk here is that unless you sell the stock, you're not yet losing. Okay, if you are in an investor, I mentioned earlier that you wouldn't really mind the dips, the downtrend. So when it goes down, you wouldn't really mind. But if you are a trader, and normally the nature of a trader is that they do this full time. So that's why you would hear a lot of people saying cut your losses, cut your losses. That means they're addressing that to a trader or to a would-be trader someday, because the goal of a trader is to gain little or small profit several times, or small profits in several occasions in a short period of time. Maybe in a day, they would go in the market, buy and sell, and then with just 3 or 4% or sometimes 7% gain, they would sell. Now, what if you buy it at a high price, okay? And then after you buy it at a high price, it went down. If you are not able to cut your losses, then you could be stuck for several days. Wait for it to, of course, if you will not cut your losses, I don't know how long will it take for it to go back again, just to go break even. So in the context of what is your risk tolerance, an investor would not mind, okay, would not mind if a stock fluctuates, even if it takes months. Their portfolio, okay, their portfolio is red, they wouldn't mind, because an investor will think that, hey, this is on sale, this is my opportunity to buy some more. Later, I'm talking to my friends. Okay. The next one is, okay, trading is a skill, investing is an art. When we talk about skill, it requires practice. Okay, let me just. Okay, investing is an art because they're able to see what others cannot see. They're able to see the growth potential of the company 5, 10, or even 20 years down the road. Now, traders look at previous performance patterns. They look at the previous price, the indicator. Sometimes you would go to my page, you will see those lines, weird looking, intestine like images there. Those are indicators that I use. That's what we call, I use Bollinger Band and RSI. Those are my indicators. And the objective of that is we look at the previous performance, we look at the candles, we look at the what we see right now to predict the future price. Now, it's so different because an investor would see the potential. That means it's an art. You cannot see it yet, but an investor sees it. What can the price be 10 years from now? Okay. So I just want to share a quick story. This is about Rex Mendoza buying, I think he bought PLDT back in 1983, if I'm not mistaken. If not mistaken, it was about like 3 pesos, 5 pesos back in the 1980s. But right now, how much is PLDT? It's around 1,000 plus. But what did Rex Mendoza see at that time that made him realize, okay, I'm investing in this company because there's a big potential? He sees it, he saw it. So it's really an art. Now, the question is, uh, can I be both? My profile, I just want to share with you my profile. I'm actually both. Okay. So yes, you can buy. It depends on your mindset. If you would like to buy this stock, oh my gosh. Can you guys still hear me?